Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thank you for joining us. So we sit here today on March 15th. My daughter's actually 17th birthday. And stock markets are close to all-time highs on the expectation that the Federal Reserve is going to be cutting interest rates sometime soon. And if you've been watching these videos and you know that Josh and I have been saying all along that we think the Federal Reserve cutting interest rates doesn't make a whole lot of sense. And when you look at the Fed funds prediction, the market's prediction for when the Fed's going to cut rates, the market will be certain that in 3 months they're going to cut rates. Then we get closer to that date, and then it looks, the probability of them cutting rates keeps going down and down until they don't cut rates. And so Josh and I live in this place called the real world, where we go out in society and we see the behavior of the consumer either at airports or at restaurants or at shopping malls. And the consumer is still doing really well. We have unemployment still under 4%. And so the consumer continues to spend. And so we don't see any reason, when you look at the economic environment in the US, that the Fed would be cutting interest rates, because the economic activity is so robust. And so, if you go back throughout history and you look at an economy like this, the Fed would never be cutting interest rates. And so that's what, we keep saying higher for longer. We've said that all along. You look at the history of interest rates in this country, and they go in long cycles. And we think we're in the cycle where interest rates are going to be headed higher over the next couple decades. And so Josh can talk about why that is as it relates to inflation. But, we also have a government that's borrowing money at unprecedented rates, and that's another force keeping interest rates higher.
We got a higher than expected producer price index inflation print this week. That was preceded by a higher than expected consumer price index print last week. The February numbers weren't quite as bad as the January numbers. The January numbers absolutely smashed expectations to the upside, but the February numbers are going to be really hard for the Fed to ignore. The big reason is that there's actually more categories that they monitor that are accelerating on a 3-month basis versus a 1-year basis. That super core that they really care about, 4% annualized now, so double their 2% target. Not making much progress, actually getting worse relative to where it was. So it's really tough to justify them being able to ignore this, and cut expectations, in our eyes, should absolutely dissolve. Housing is accelerating. House price appreciation and rents are both increasing. There's a number of reasons for that, namely demographics. But these prints are not what the Fed wants to see, and those expectations for a cut should totally dissolve. The Fed Atlanta wage tracker is at 5%, with 5% wage growth. Really tough to see why interest rate cuts should materialize, but namely the data continues to get worse. The team transitory seems to have been totally proven wrong after declaring victory just 6 or 8 weeks ago.
Yeah, so when we look at the interest rate environment, we don't see the interest rate environment currently as restrictive or overly stimulative. So we're probably somewhere close to the neutral rate. It's hard for us to imagine the Federal Reserve cutting rates. Remember, the reason most Americans feel sort of worse off is because of inflation. Inflation is a sort of incendiary thing that's really hard to conquer, and the Fed has to deal with inflation. And so, the idea that they're going to be cutting rates, inflation would come screaming back, and their job would be that much harder, and we would have ultimately a worse recession. And so the market really is trading on the idea that the Fed is going to be cutting rates, and we just don't see it. So what does that mean? That means expect some volatility to the downside, right? It's not the end of the world when we have market sell-offs. Remember, we had 2 really big sell-offs in 2023, but the market ended up over 25% higher. So we're not bearish about the return for the stock market this year, but we're expecting some volatility in the very near future.
I think one thing I also want to add is that when you see stocks increasing in the wake of these bad inflation prints, it's almost like market participants are thumbing their nose at the Fed, and they believe implicitly that 2% inflation target is not going to be met, or the Fed's not willing to do what it takes to actually meet it.
Yeah, and we just think the Fed is saying what they're going to do, and that is to get to 2%. So if you have questions about your situation or your account, you can always call us at the office, 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.